Hello friends, welcome back to my channel. My name is Future Way. Today we are here to talk about misconception of TA. Before we start, smash the like button and subscribe to the channel. The entire topic consists of 5 parts: candlestick, price pattern, indicators, and added wave. The last part will tell you the truth about technical analysis. What actually is technical analysis? Technical analysis is using candlesticks, price patterns such as a rectangle, inverse head, left shoulder, right shoulder, using indicators such as RSI and volume, using Elliott wave to forecast future price of a financial asset and make a fortune for a living. First topic, we are going to talk about candlesticks. By definition, a candlestick on a weekly chart, this is a weekly chart, is a combination of patterns on lower time frames, such as this, the daily chart of near USDT. Misconception number 1, our technical analysis. First is, we start with candlesticks. Some people said that color are unimportant when looking at candlesticks. In fact, this is a very wrong idea. Candle work best during high volume period. The color indicates strong bull or strong bear, being in control. If a trader does not respect the candles, they'll eventually end up buying here and end up losing money. Coming up next, we'll be talking about types of candlesticks. First, we have morning star. Morning star consists of a big red candle followed up by a small green candle. This indicates that the selling pressure has been decreasing by having a candle closing bullish. It also signifies a potential end of a bear trend, and this is a strong reversal pattern if it occurs at the support. The target profit for buying is at the candle open of the big red candle. From the chart, we can spot a morning star is being formed at a support or a wave fall of near USDT. However, the small candle is closing red instead of green, but the pattern is still valid with a target profit of at the candle open of the red candle. Next up, we have evening star. Evening star is a big green candle followed up by a small green candle. This shows that the buying pressure has been decreasing because the body of the green candle is very small. It also signifies a potential end of a bull trend if it closes at a strong resistance and a reversal pattern to change the trend from bear to bull. The target for evening star is back to the open of the big red candle. From the chart, an evening star is seen on near USDT here, followed up by a tweezer top pattern. These two candles form a tweezer top, which is a sideways pattern and an indecision of the market. Sometimes, in technical terms, we call it distribution phase. If we spot evening star and a tweezer top at a resistance, it's very likely that the trend will reverse. So be aware and be alert when you are trading and seeing this kind of pattern. Next up, we have shooting star. Shooting star is a strong big green candle followed up by a small red candle. The red candle has a long upper wick as compared to evening star, which is green in color and the wick is smaller. It suggests a minor reversal after a strong bullish rally. The TP for shooting star is back to the candle open of the big green candle. From the chart, we notice that a shooting star is formed at the resistance in near USDT pair. However, the shooting star leaves a wick outside of the range, which we term it as false breakout. If this scenario occurs, it is very likely when the candle goes back into the range, we will see it to fall back to the candle open of the big green candle. Traders should take notice of this. A false breakout will eventually lead to a trend reversal, temporary or long term. Next up, we have pin bar. A pin bar has a long body upper wick and is closing green in color. It indicates that the buyers failed to push the price up and got rejected. This will eventually lead to the price to fall afterwards, with a bearish candle forming next. However, if we are still in a bullish trend, the wick might get filled afterwards. From the chart of near USDT, you can see that there's a pin bar forming here, followed by a red candle. What comes after that is the price drop eventually to this retest area. However, because near USDT is forming a third wave, this is a third wave and it's still on a bullish trend, the wick eventually gets filled after that. Next, we have Hanging Man. Hanging Man is a candle with no top wick and it normally closes at a significant resistance. The market will tend to reverse and potential being a market top. In near USDT, we can see that there's a green hangman candle close at a resistance. And what happens after next is the price drop. On here, we can also see that the two other candles, which the combination is known as a tweezer top, but separately can call them hangman. The candles have no wick, leaving no space for it to go up. So the chances for it to reverse is very high. Last but not least, we have Doji. Doji has both upper and lower wick having the same line. Sometimes we call an indecision candle as stated in the textbook. However, on an uptrend, the Doji is continuation pattern. On a downtrend, the Doji indicates a weak buying pressure, resulting in a trend continuation. On this chart, we have BNB USDT. You can see two Doji forming at a support and at a resistance with different purposes. When the Doji is seen on a support, we can have a bullish trend afterwards. If a Doji is formed on a resistance, it tends to act like an evening star with a target at the candle open of the green candle. Lastly, we have engulfing candle. The big body candle engulf the previous small body candle. The big candle shows that buyers or sellers are no longer in control. However, the big candle closed above the resistance of the small candle and below the support of the small candle. Hence, a very high chance of trend reversal if it happens after a strong up or downtrend. From near USDT, there's a very strong bearish engulfing candle occurring at a resistance, followed up by a weak doji. From previous slides, we learned that a weak doji can be a continuation pattern on a bearish trend. This occurs because the buyers fail to push the price up and form a support. That's all. Thanks. That's all for today. Please leave a like and subscribe to the channel.